Hello, my name is Edmond Jamna, and on behalf of DW Consult, I want to welcome you to Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, or shaky base in accounting to an expert position and to a place of confidence. It is also a platform to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as for any tertiary accounting discipline. All that is required of you is to subscribe to our channel and click on the notification bell as well to be part of the program. Tutorials on the Go, bringing accounting to heart. Now, to this episode's lecture. Correction of errors in suspense account. Now, we are still learning to identify errors and remedy them before the preparation of the financial statement. We have hitherto discussed using the cash book and bank statements, receivables and payable ledgers to fish out and rectify errors. We are in this lecture going to discuss other errors and mechanisms that the trial balance can be used to unearth and sort out errors. So we first take a look at errors. Errors are unintentional entries that renders the financial statement not to faithfully represent the activities of the entity. Now, there are two types of these errors. The first is those that have no impact on the balances of the trial balance. The second type of error is those that will cause the sides of the trial balance to unmatch. Let's first take a look at the errors that will have no impact on the balance of the trial balance. First, we'll talk about is error of omission. Now, this happens when a transaction has been omitted totally from the accounting records. Example is when a cash sale of $10,000 has not been recorded both in the cash and the sales account. The second is error of commission. Now here, a transaction has been recorded in the wrong account, but the double entry rule has been adhered to. Example, an electricity expense of $1,500 being debited to the office stationery account. Error of principle. A transaction is entered into a different class of account with the same double entry rule. Example, a property, plant and equipment purchase of $100,000, which is an asset, being debited to the rent account, which is an expense. Error of duplication. This occurs when transaction has been recorded twice. For example, a cash sale of $1,000 debited and credited twice to the cash and sales account respectively. Compensating error is when two different errors have been made which cancels out each other. So, example, a payment for telephone of $5,000 has been debited to the telephone account as $500, meaning there has been an understatement of $4,500. At the same time, a casting error on the sales account results in the sales being understated by $4,500. So here, a debit and a credit entry goes down by the same amount. Error of original entry. The correct double entry is made but with the wrong amount. So, example, a cash receipt from a receivable of $76,000 has been recorded as $67,000 both in the cash and the receivables account. Errors of reversal of entries. So here, the correct entry has been posted to the correct account but on the wrong side. For instance, a cash sale of $200,000 debited to the sales account and credited to the bank account instead of the vice versa. So when correcting these errors, a good approach is to consider first, what was the double entry that was made out of the error? Secondly, what should that double entry have been, if not for the errors? Then lastly, we effect the necessary correction based on the second point. So here we always assume that if one side of the double entry is not mentioned, then it has been recorded correctly. We test our understanding. We have to provide a journal to correct each of the following errors. So 1, a cash sale of $10,000 was not recorded. So this is an error of omission. 2, electricity expense of $1,500 paid in cash has been debited to the stationery account in error. So this is an error of commission. The third is an non-current asset purchase of $100,000 on credit has been debited to the rent expense account. So an error of principle. A telephone bill of $5,000 paid in cash has been debited to the account as $500, and a casting error on the sales account has resulted in sales being understated by $4,500. Now this is an error of compensating. Okay. And last but not the least, a cash receipt from a credit sale of $76,000 has been recorded as $67,000 as error of original entry. When we come to the solution, the first one, the error that was committed was that nothing was recorded. So the cash should have been debited for $10,000 and the sales should have been credited. So based on that, we effect the correction. In the second example, they debited stationery and credited cash for $1,500 instead of debiting electricity and crediting cash of $1,500. So now the cash entry was correct. So what we do is that we debit the electricity account for $1,500 to effect the correction and credit the stationery for $1,500 to cancel out the error. Thirdly, a rent account being debited and payables account credited for $100,000, whilst non-current asset account should have been debited and payables credited. The payable entry is without error. So what we do is that we debit the non-current assets of $100,000, then we credit the rent account to cancel it out. Fourthly, a telephone account was debited for $500 instead of $5,000, and a cash account was credited for $5,000. Now, when it comes to the second scenario, there was a debit of $6,000 and a credit sales of $1,500. Now, this $6,000 is just spec for demonstration purposes only. It was not stated in the question. We are supposed to demonstrate the shortfall in the sales account. So you see that in the first scenario, $4,500 has been reduced in a debit account. And the second one, a $4,500 has also been reduced in the credit account. So we debit telephone account for $4,500 to restore it to the actual amount. Okay, since the cash was done correctly. Then we credit sales with the extra $4,500 that was reduced to bring it up to the $6,000. Lastly, there was a debit to the cash account of $67,000 and credit to receivables account of $67,000. So here, the cash should have been debited and receivables credited with $76,000 rather. So we top it up with the difference. We debit cash and credit receivables with a difference of $9,000. Now that we are through with the errors that do not have any cause on the balancing of the trial balance, let's move on to those that actually affect the matching of the trial balance. Now the first error is a single side entry. So here, a debit entry has been made but no corresponding credit entry, or vice versa. The second one is when the amount debited to one account is different from that of the corresponding credit entry. Thirdly, two entries have been made on the same side of the account. For example, a cash sale transaction being debited to both the cash and sales account instead of debiting it to the cash account and credit to the sales account. Fourthly, an incorrect addition of the entries to an individual account, that is miscasting. The next one is when an opening balance is not brought down in one account or the other. Lastly, extraction error. This simply means that when the balances are being moved from their ledgers into the trial balance, there is an error. A suspense account is used to clear out the errors that render the side of the trial balance to differ or disagree. Suspense account is to make the total debit equal the total credit. It does so by holding the difference in the trial balance temporarily until sufficient information is available for them to be posted to the correct account, employing the rules of double entry bookkeeping. So corrections to any of the 6 errors just mentioned or discussed above will affect the suspense account. So there are 2 main reasons why a suspense account may be employed. 1, when the debit does not equal the credit of the trial balance, meaning when there's a difference in the trial balance. 2, when accountant or a bookkeeper is unsure of the account to post one entry of a transaction. So he or she may enter it into the suspense account and will be left there until an appropriate determination. So the suspense account must be cleared or zeroed before the preparation of the financial statement may be proceeded with. Let's look at how these errors will also be corrected. It's the same as the earlier one. What was the double entry that was committed out of the error? What should the double entry have been if the error was not existent? Then what is the correction required? Then we get it affected. Let's test our understanding. On extraction of a trial balance, the accountant of GKA Limited discovered a suspense account with a debit balance of $1,075 included therein. She also found that the debit exceeded the credit by $957. She posted this difference to the suspense account and then investigated the situation. She discovered in the process that a balance of $75 on the postage account have been incorrectly extracted on the list of balances as $750 debits. So meaning that when they were extracting the postage account, instead of it being 75 into the trial balance, it recorded $750 rather. But again, the cash account was not made mention, so it means that the correct entry was made. Secondly, a payment of $500 to a credit customer X had been only entered in the cash book. So this is a one-sided entry. Thirdly, when a motor vehicle had been purchased during the year, the bookkeeper did not know what to do with the debit entry. So he made the entry debit suspense and credit bank with $1,575. Fourthly, a credit balance of $81 in the sundry income account had been incorrectly extracted on the list of balances as a debit balance. Like both the income and the cash account has been debited, which shouldn't be so. Fifth, a receipt of $5 from a credit customer Y had been correctly posted to his account but had been entered in the cash book as $625. The bookkeeper was not able to deal with the receipt of $500 from the owner's bank account, and he made the entry debit bank and credit Suspense. 7th, no entry was made for a check of $120 received from a credit customer M. 8th, a receipt of $50 from a credit customer N had been entered into his account as $5 and into the cash book as $5. So you realize that the 7th and the 8th will not cause any difference in the trial balance. So what journals are required to correct the errors and eliminate the Suspense account? So when we take the first one, the error that was made was postage being debited for $750, a credit to the bank account of $75. So the Suspense account is now going to hold the difference. The correct entry was a postage of $75 and a bank credit of $75. Now the bank was correctly entered. So we come to the Suspense account and zero it now that we have found where the error is. Because it was first credited, we debit it with $675. Then we credit the postage account, $675. Secondly, the $500 was not readily known where it should have been posted to. The cash entry was correctly entered to, the other leg was to Suspense account, while the correct entry should have been the payables being debited and cash credited of $500. The cash entry is already made, so we come to the payables account and now restore the correct balance for $500 debit. Then we go to credit the Suspense account, zeroing it. The third is that the Suspense account was debited for $1,575 and the bank was credited for the same amount, whilst the correct entry should have been a debit to the asset account and a credit to the bank account of $1,575. So we debit the asset that should have been done with the amount and credit the Suspense. The sundry income was debited and bank was also debited. So the Suspense will capture a credit of 162, which is the double-sided entry. So the correct entry should have been a debit to bank of $81 and a credit to sundry entry. The bank entry is accurate. So we come and debit the Suspense account with 162 to 08. Credit the sundry income with 162. Now this 162, half of it, which is 81, will clear out the error. Then the other 81 will restore the entry that should have been made originally. Fifth solution. The cash was debited and receivable credited. The cash was debited for $625. The receivables account credited for $5. So the Suspense account will hold the difference. Upon investigation, it should have been the cash debited and receivables credited for $5. So the Suspense account will now be debit for $620 and go to the cash and credit it to clear out the error to reduce it to the actual amount of $5. Set solution. The bank was debited for $500. Then the Suspense account was credited for also $500. The entry should have been the bank debited and capital credited for $500. We go to the Suspense account, zero it by debiting it because it was earlier credited, $500. Then we now credit the capital, restoring the entry. Now, 7, as I said earlier, is not going to affect the trial balance. The error that was committed was nothing recorded. So the entry should have been the bank debiting the receivable credited with $120. We now effected 8. Cash was debited, receivables credited for $5 instead of cash debited and receivables credited for $50. So we debit the cash account with a difference of $45 and credit the receivables as well with $45. Now we move the corrected entries to the Suspense account into the Suspense ledger. Okay, there was an opening balance of a debit of $1,075. So the postage account had a final debit of $675, the sundry income $162, cash of $620, bank of $500. We come to the credit side. There was also a difference. The debit was more than the credit with an amount of $957. The payables also had $500. The asset account also with $1,575. So when we close the account, the balances for the debit equal that of the credit, meaning that all the errors that cause the trial balance not to agree has been sorted out. People, that is where we bring our discussion to a close. If you have any question pertaining to this lecture, feel free to drop it in the comment section below. Whilst at that, kindly subscribe and share till we come to you again by way of tutorials on the go. Take care of yourself and stay blessed. Poker.